Good morning, Brigade community and Bookmap listeners. Happy to have you all here. For those of you that are here this morning, please smash that thumbs up right away. Let's get that algorithm to send some new people our way. For those of you that don't know who I am, my name is Charles. I run a community called Piratetraders. We're focused on the ES, the NQ, and the two-way auction process. So what we're going to talk about this morning is what I think might happen today and this week with the S&P 500 and the NASDAQ 100. So let's dive right in. So last week, the market was doing something that we call the market being pinned, which basically just means it picked a level and it just did not want to get away from that level. When the market tried to go higher, it pulled it back down. It spent a bunch of time right around that level. When the market tried to go lower, they pulled it right back up. They spent a bunch of time right around that level. And then finally, at the end of the day on Friday, we kind of broke away from that pin, Thursday, and then spent some time going sideways. Okay. So what that means is one of two scenarios is at play here. The market is finally ready to break away from this pin and get a move to the upside, or the market is not ready to break away from this pin, and we got to come right back down to it. So we're looking at last week's range as what we call a balance area. A balance area is basically just an area where the market needs to spend time having two-sided trade. It's a place where the market on a sort of daily, weekly time frame needs to play tug of war. The buyers try to take it higher, the sellers try to take it lower, and then they just battle with one another. Okay? Now, the overnight did something that is bullish to see. The overnight started to break out of that balance area, and it spent a lot of time and brought in a lot of volume above that balance area high. So that is bullish to see. It slightly increases the odds that the market wants to continue higher. It also created a new, what we call a weak high. Anytime that a new all-time high is created in the overnight market, we consider that weak, meaning that at some point, and it doesn't mean it has to be today, but at some point, the regular trading hours market needs to go up there and test that new all-time high. They need to just poke above and see if there's any new business up there. So those two things, the fact that they were able to break above the previous all-time high and bring in volume and spend time, plus the fact that they left behind a weak high in their wake, both of those things are bullish to see. However, as is always the case with market-generated information, it's never that simple. There is more context that we must take into account. And that context is what we call a look above and fail of the balance area high. The fact that they broke out of balance is bullish, but the only way it stays bullish is if they stay broken out of balance. As soon as they pull back into balance, which the overnight has now just done, that increases the odds that, in fact, we are heading back down to the opposite end. So that is bullish to see, or bearish to see, I mean. So let's start off today by zooming all the way out and taking a look at the monthly candlesticks to do what Jim Dalton calls a top-down approach. We're going to use the larger time frames to give us context to understand what's happening on the lower time frames. Okay? So in terms of the monthly chart, the market is in momentum, right? It is just going like just straight up every month, higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs and higher lows. And as long as that momentum continues, that momentum can continue. So there's no reason to think we can't keep going higher for months and months to come. However, on a monthly time frame, now this is a much longer time frame than we're used to talking about, but on a monthly time frame, the market is getting itself quite overextended. It is really starting to get a little too much momentum, getting a little too far, a little too fast. So at some point, the market is likely to pull back down and backtest the previous all-time highs that we had around 4,800. Okay? Now, does that need to happen this month? Absolutely not. That's what the momentum tells us. They can keep going for months before they come back down. But we're just aware of the fact that this can't go straight up forever. At some point, the market has to roll over and pull back a little bit. Okay? Doesn't have to be this week. So now let's zoom in and let's take a look at the weekly and see, is there any more information that we can gain from that? Well, the same thing is true. We can see that we've had a lot of momentum on the weekly, but the market has had opportunities to balance that off using time. It spent a couple weeks balancing off the momentum here. It spent a couple weeks balancing off the momentum here. It spent a couple weeks balancing off the momentum here. So once again, on a weekly time frame, there's no reason at all we couldn't keep going higher week after week from here. Okay? Now, if the market this week were to pull back down and get below last week's weekly low, that would change everything. That would tell us the market likely needs a larger pullback with price. But as long as we stay above last week's weekly low, there is no reason to assume that this market can't just keep going to the upside. All right, and then let's zoom in and we'll take a look at the daily candlesticks. So on the daily, we can see that we are in a channel up and to the right. That channel is acting as support and resistance. And right now this morning, we are opening smack dab in the middle of that channel. So that doesn't really help us that much in terms of the channel because it could head down to the low or the high. But it does tell us that this thing could still have a lot of momentum to the upside. We have not tested the upper end of that channel. So we absolutely could keep going all the way up to the 54.30s. Okay. We could also have a big pullback down to the 52.80s, but there is always an opportunity for that momentum to continue to the upside. Let's also, while we're zoomed in here and we're looking at the daily candles, let's just take a look at this balance area. So we could basically draw this balance area as from the lows of last week to the highs of last week. And we could just say that is our balance area. So as of now, when the market opens in 20 minutes, it is a look above and fail of the balance area high. That means as of the open this morning, the highest probability is that the market needs to pull back down towards the opposite end of bounce. That is, of course, bearish to see. But what would change our minds? Well, it would convince us that we don't need that look above and fail that's going to head all the way down towards last week's lows. Well, if we can get back above last week's highs, right? If we can bounce first thing this morning and get back above last week's highs, there is absolutely potential for this market to continue to the upside. Okay? So now let's zoom in a little more and we'll take a look at it on the market profile chart to get some more exact levels. So if I had to pick an area that I would call the balance area high, it would pretty much literally be yesterday's high, Thursday's high. It would be around, we'll call it 53.20 will be the balance area high. So if the market this morning opens and we start to chop sideways, which is the highest probability, but then we're able to get back above yesterday's high, back above Thursday's high, what does that mean? Bullish, my friends. Bullish. And we are looking to head up first to test the resistance around 53.28. And if we can get through that to make new all-time highs at 5,333. So that is very bullish to see. If we can get above Thursday's high and bring in new buyers up there. Okay? If not, if the market opens this morning and we chop around and it's just Chopsville and then we start to test Friday's low, well, that is very bearish, don't you know? Because that means that this is a look above and fail of the balance area high, increasing the odds that we're heading down towards the balance area low. And we could just call that the poor low at 52.71, right? So then you say to me, all right, Charles, we get it. If we get above yesterday's high, it's bullish for continuation higher. If we get below yesterday's low and it's bearish for continuation lower, what happens while we're inside, Thursday's range? What happens while we're bouncing around in there? Well, you, my friend, best get ready for some chop. Now, when we look at Thursday's range, it is a very, very tight range with an extremely prominent point of control that we are about to literally open at. We are also about to open really close to Thursday's opening price. That is behavior indicative of a pin. That is behavior indicative of a market that is being controlled by, the option sellers. Okay? That increases the odds we're heading back down. So the fact that we spend so much time going sideways in this range on Thursday means that when we open this morning, we are likely to just keep doing that. We are likely to just keep grinding around and grinding around and grinding around inside that range, maybe 4 hours, maybe even all day. But once we get above the high or get below the low, there are excellent opportunities to go short or long for continuation. And whilst we're chopping inside the range, you can play it as chop. You can look for a reversion to the mean opportunities where you're taking the minimum possible risk compared to the potential reward. Any questions from the chat? Buenos dios to Sergio, welcome. Will is here. David G in the house. Nap, good morning. Trevor, good morning to you. Tony is here. But I better drink some coffee. Jay, living the dream. Another day in Paradise. Let's do it. The demo trader is here. Welcome to you. We got 73 people hanging out. Only 12 thumbs up. Let's smash that like button. Pew, 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 pew. Also, please, I have one favor to ask. No April Fool's jokes in the chat. Okay? Every year, people say stuff in the chat, which is an April Fool's joke, and I take it seriously and spend like 5 minutes responding to it, not realizing that they're kidding. So no April Fool's jokes this morning. Good morning to Mr. Ree. Andrew says, when you say bearish if we break last week's low, what is the break of the wick or the candle? It's the wick. If you're looking at the candlesticks, it'll be the wick. So it will be 52.63. If we break that, it means we're going to get a larger pullback with price. However, we don't have to go lower right away because of that bounce area. So right now, as of this moment, depending on how the market reacts this morning, the higher probability is that we're heading down to 71. If we just get down to 71, we dip below there, we repair that weak reference, and then we turn around and head back up, well, it's not bearish at all, because we're just going to keep going sideways inside this range and probably break higher. It's only if we start to get below that weekly low that things really start to get bearish for that larger pullback. Now, if you're looking for levels of interest on that larger pullback, again, it's way too early to make that call right now. But if you were looking for levels, the first ones would be the repair of these weak references between 52.41 and 52.35. If that is not enough to reverse the market, 52.26, and then there is support just below there between 52.19 and 52.12. Okay, so if the market were to rotate to the opposite end of balance and it didn't turn around and come back up, it'd be likely to head and repair those first week reference. If it doesn't turn around and head back up, the next one. If it doesn't turn around and head back up, there should be support in here to look for a bounce. But again, it is way too early to make that call, because this morning we could just as easily poke up above Thursday's high and then off to the races to the upside. And we could also head all the way down to that poor low and then literally reverse and come right back up. So either scenario is possible before we worry about that larger pullback with price. $15 minutes till market open, and we are literally sitting right on the opening price from Thursday. That further increases the odds in my mind that the market is pinned. Scalp Demon in the house. Good morning to you. Fighter Pilot is here. He says, good morning to all. Hope everyone had a good Easter. And we all are truly blessed. Have a good week, everybody. Hear, hear. I concur. Alt says, good morning to everybody from Alberto. Hey. Bernie is here. Good morning to you. Bernie says, glad to be a new pirate. Glad to have you. Yeah, we had a bunch of new people join last week. Mad props to everyone who spread the word about the brigade. I appreciate you guys so much. Frito in the house. Branko, greetings to you. So we got 15 minutes till the market opens, and my analysis is done. Chop inside yesterday's range, bullish above, bearish below. Any questions from the chat? Oh, we should take a look at the NQ. That's what we should do. Yeah, NQ significantly less bullish than the ES. They did not ever get near their all-time highs last week. So they are also balancing, but it's actually sort of balancing more like in a channel to the downside. So that is less bullish to see. I'm calling the pin on the NQ as being 18,550. So we are opening below that. That would tell us if the market remains pinned, the highest probability is that we're heading up to test that, but that we probably don't want to get overly bullish just because we get above Thursday's high. I know this is a very annoying thing to say, but to me, it's basically a chop zone between Thursday's low and this node right around 1860 or 18,590, this area here. I would be very cautious getting bullish unless we got through this node of resistance right here between 18,560 and 18,590. This area will likely act as resistance. So the market gets back up to that pinned level, pushes up into some resistance, and then gets smacked right back down. So I would need to see us get above there and get new support to really start to get bullish on the NQ. Otherwise, it looks like it's going to be choppy. We are also opening very close to the lows. So same story. If the market gets below Thursday's low and it gets new selling, that is very bearish for continuation lower. Let's just zoom out real quick. We'll take a look at the daily for the NQ. Get some context here. Yeah, it ain't good, folks. It ain't good. The NQ is dancing right on that support. So any move below Thursday's low on the NQ is likely to give a larger pullback with price. I would say to head down towards 17,950. So the NQ has really got to bring in the buyers first thing this morning and keep the momentum going, or they are likely to get a pullback. That is also bearish to see. If the NQ does start to pull back, the first potential area of support is going to be around 18,420. So basically, that's your last large cumulative node right here. The NQ loves to bounce from cumulative node to cumulative node. So they tried to poke above this one in the overnight and couldn't. So that increases the odds they're heading down to the next one. If they can't reverse there and turn around and start heading back up, it means they're heading down to the next one down here around, looks like about 18,350. And if that one doesn't hold, the next one and the next. So yeah, NQ is dancing right on a razor's edge this morning. They need to bring in the buyers on the tech. Someone say something about AI. Debbie B in the house. Good morning to you. Percy is here. Bonjour. Pirates. Welcome, welcome. Good morning to Nicholas. All right, so now that my mind is on the pin, I'm zooming out with the Bookmap software. Generally speaking, if the market is being artificially controlled by the option sellers, you will start to notice very large, sort of random nodes of liquidity sitting in some random spot on the chart that doesn't really make any sense. Well, there you have it. 52.50, same place it was all week last week. That node was just sitting there all week long. And what that basically does is there are bots that are day trading bots. And those day trading bots, they use the liquidity in the order books as their mathematical framework to understand what kind of moves to do throughout the day. As long as there's that giant node of liquidity sitting down there at 52.50, those bots won't let the market go crazy to the upside. They just won't, because they know that there's that large pool of liquidity below. And so that kind of just messes up the way those algorithms work. So as long as that remains in the market, which it is still there this morning, that further increases the odds in my mind that the market is pinned, which further increases the odds this was a look above and fail, which further increases the odds we're heading to the downside this morning, but we'll have to wait and see what happens when that opening bell rings. Good morning to Nicholas. I don't even know how to say this name. Nuhinno. Bonjour to you. Which version do you use on Bookmap? I got the full everything. I got the whole package, baby. But I will tell you, when it comes to Bookmap, what I'm mainly focused on. The number one thing that I'm focused on is the heat map. That is where I get most of my information. So the heat map is basically right here. This white column that's running down the side, that is the current order book. So that's where the liquidity is currently sitting, waiting to fill. And then you can see how those colors change on the chart to the left. That is showing us how that liquidity is changing based on how price is changing. And that is the main context that I'm using Bookmap for, recognizing what is happening in the market based on liquidity rather than just based on volume. So over here on the left, this market profile chart is showing me volume profiles. So that's showing me what levels the most volume actually traded. But Bookmap is showing me where was the liquidity at that time that wanted to trade. And so that is the first edge that I use Bookmap for. Next, I focus on the stops and iceberg settings. I use those to recognize when there are computers doing a lot of business. That could either be a large player trying to hide size, or it can just be, bots doing their bottest to bot around. And so recognizing when that is what is taking place is very valuable to me. That's what the icebergs are for. And then the stops show me when large players are stopped out. Often when a large player is stopped out, that is where a market will reverse. So if you see a stop, we don't have any in the books right now, but if you see a stop with 200 contracts or 500 contracts or something like that, that's probably all the market needs to make a little reversal. And then lastly, the volume dots, or second to lastly, the volume dots. So that's these little dots that pop up right here. Those are showing us the delta between buyers and sellers. If it is a red dot, it's more sellers. If it is a green dot, it's more buyers. And the size of the dot tells us the size of the difference. So if it's a very large dot, there was way more sellers or way more buyers. And if it's a small dot, it was almost the same. And the reason that's important is because, again, it often tells me when there's a change in the market, right? If the market is pushing towards a certain level, here we could use this as an example. The market is pushing down, it takes out all those stops, right? That's why we got that big red volume dot there. Well, if it had started to turn right back around, no big deal. I could get really bullish for continuation to the upside. But then when they took out another set, that began to create momentum down. So by seeing those changes, I can tell when something changed with the market. We're no longer doing business up here. We need to head down and do business down here. Okay. And then lastly, I'm really starting to love this little tool right here, which is called the Market Pulse. And the way I've got that set up is I'm using the volume pressure imbalance on it. So it's basically measuring when there are more buyers than sellers, like second by second in this exact moment, right? And again, that helps me to understand when the market is either likely to flip and reverse the other way, or when something has changed with the market and it's going to get continuation. So if I'm sitting here watching the market chop around, watching the market grind around, and then all of a sudden I hear this little noise, bup, 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 you'll hear it too. Something's about to happen. Either they just took out a bunch of stops and they're ready to head the other direction, or they're bringing on a bunch of new sellers and we're going to head much lower. So this is a really great tool to just catch my attention and get me to focus on the chart at this exact moment. Something is happening right now. I need to be aware. That's how I use the Bookmap. 1 minute to market open. Dun dun. For those of you that are just joining us, please hit that thumbs up button. I sure would appreciate it. And also just to tell you what I'm thinking for this morning on the ES, I see it as a look above and fail of the balance area, meaning the highest probability is that we are heading lower down towards 52.71 today. We don't necessarily have to get there, but that is the most probable direction. As far as taking trades, before I'd be willing to go short, I would need to see the market get resistance below Thursday's low, below 53.03. Then I would look for momentum trades to the downside. If the market gets above yesterday's high, 53.21, and it finds support up there, I would be bullish to first test this node of resistance around 28. But if we can get through that, new all-time highs, baby, above 33. So we are monitoring the sideways chop to see which way it breaks. As long as we are inside yesterday's range, Thursday's range, we are in a chop zone. And the market is likely to just drive you nuts going up and down and up and down and up and down. Let's see how it goes. Right off the bat, we are leaving a weak high behind. That increases the odds of chop. We also opened almost exactly at Thursday's fairest price to do business. That tells us that we are likely still pinned. Bearish to see. So market going sideways, higher probability it will break lower, but everything will change if we get above Thursday's high. And I'll get real bullish real quick. Get above and stay above. It's a chop zone. Well, they'll chop it up. In the Pirate Traders Brigade, we are focused on market-generated information. That is information we can see in the charts that gives us an idea of what is happening in the market. We don't guess and we don't gamble. We stay focused on what the information is telling us. So right now, I'm seeing chop. I'm seeing the market just going up and down for hours to the side. Why am I seeing that? Well, there are several pieces of market-generated information. The first is Thursday's range. That very prominent bell-shaped curve tells us the market has got two-sided trade in this area, likely to increase. Okay? The fact that they brought in so much volume and spent so much time above Thursday's range in the overnight, but they had to pull back in for the open, further increases the odds of chop. And lastly, leaving behind that weak high this morning, right out the gate, which it looks like we're going to repair as we speak, that is also a sign of chop. So I'm not guessing that the market is going to go sideways. I am telling you the market-generated information says that is the highest probability. When the information changes, I will change my perspective. I will change my opinion. And the information always changes. So that's what we're doing. We're watching and waiting for that new piece of information to tell us we're no longer chopping. We're ready to go up or we're ready to go down. Let's see what happens. Okay, there's the repair of that weak high. However, guess what they left behind at the low? You guessed it, a weak low, further increasing the odds of chop. Oh boy. Good morning to Bust a Move. Willie T. Knapp says we got some numbers at 9:45. We will look out for some volatility here in about 10 minutes. Tony says 1 minute and 40-second lag on the stream on my end. Say it ain't so, Tony. Try a quick refresh on the YouTube. Maybe you get caught up to speed. If not, you're probably fine. The market's going to go sideways for a while here. You could be a minute and a half behind. Of course, I said that a minute and a half ago, so who knows what's changed since then. Cool Beans says the market information is telling me to go back to sleep and check later. There would be absolutely nothing wrong with just putting an alert on your computer at 5321 and 5303 and just waiting to hear that noise. And then when that noise goes off, you jump in front of the computer to see what's happening. Do we look above and fail the chop zone, or do we get new buying above? Do we look below and fail, or get new selling below? And you just choose not to diddle in the middle. Okay, so we're pushing up into the first resistance right here around 53.16. If that does not reverse the market, we'll be looking for resistance around 53.19 to head right back on down through that opening price. DNK says the NQ is supposed to be more bearish, but it broke the previous day's high. Again, caution on that. Remember, that's just getting back to the pin. There you go. So this is the moment of truth for the Q. Getting back to 18,550 was the highest probability thing, but it's can they keep it going now, right? Or do they get smacked literally right now? Do they get smacked right back down? So if they can get above, we'll call it 18,590 and get new buying up there, then I can join the bullish party. Otherwise, I think this is still just chop. And what I'm talking about is not intraday today. It's bigger picture. Less bullish to see. Because they are dancing right on that trend line. And if they can't hold that, down she goes. Okay, so NQ is pushing through that resistance. We have a large pool of liquidity up at 18,600. So the question now becomes, can they keep it above this node? That is the first bullish thing is breaking above. The second would be if they can hold it once they either fill or spoof this liquidity at 18,600. ES still in a chop zone. All right, you do have new buying on the Q. That is bullish to see. Again, for the NQ, not the ES yet. So you're looking to see, can they hold 18,575? Can they turn that into support and hold it? If so, you look for continuation higher. If they cannot hold that support, then you're going to get a pull right back down through the opening price. But right now, it looks like they want to try to turn that into support. 18,575. Can they hold it? ES still in a chop zone. Jay says, internal's not looking great. Yeah, it's probably a little early. Remember, when the market opens in a chop zone, the internals aren't super helpful for the first few minutes of the day. I would say don't even pay attention to the breadth or the advancers versus decliners yet. It's way too early to pay attention to those. And the ticks, I would say wait till they pull back down to the zero line from here and see if they hold. Holding would be bullish. Passing right back through the zero line would mean more chop sideways. Okay, so you hear that clicking? You see that big green dot? We just took out a lot of sellers. We just took out a lot of stops. So either the market turns around right now and comes back down towards the opening price, or we start to bring in new buyers, right? Sometimes momentum creates more momentum. First, you squeeze a bunch of sellers, then you get a bunch of FOMO buyers chasing. So now that we heard the noise and we see the dot, we can ask the question, what comes next? Do we get that reversal right back down, or do we start to bring in more buyers? The reversal means more chop. The new buyers means an attempt to break out of the chop zone. Let's see what happens. We got 160 awesome humans hanging out, but only 64 thumbs up. What's the deal, y'all? Are you mad at me or are you mad at the market? Let's get them likes smashed. Okay, Bookmap is going dark. We're starting to see the liquidity disappear. You see how there's all this color right here, and then out of nowhere, it's just like, it's just gone. That is preparing for the news. It's coming out in 1 minute. So those average everyday bracket bots are turning off to let the news bots take over. I should expect some volatility here in about 30 seconds. Let's see which way it breaks. Brian says, they just mad. World is in a weird energy mode till the eclipse on April 8th. I don't know anything about it, but okay, I'll go for it. I feel like the world's been in weird energy mode for like 4 years. Hopefully this eclipse will get us back to normal. Okay, so the news bots didn't bring in much volatility, but what they did do is confirm the taper on the volume at the high. So this is the moment of truth for the buyers. If they want to keep the momentum going, they got to go now. Because if this market pulls back down below 53.14, we'll head back for the low at 08. So the buyers have got to push it. The chop continues. Because it's a chop zone. So again, NQ got a hold, 575. Otherwise, they potentially start to squeeze all these buyers. Buyers, right? Right now, they all feel good. Right now, they're all winning. But what happens when the market starts to pull down? They all think, oh no, I got to take profits. I got to get out of my trade quick. And that creates momentum down. So they have got to hold this support. Or down she goes once again. Because it's a chop zone. Okay, same thing for the ES right here at the halfback. 53.13, this little white line, that is the halfback. If the buyers want to try to take another poke at the high, they should turn this into support. Same story as I just explained with the NQ. If it breaks, then all the buyers start to get squeezed. And we head right back down through the week low at 08. Can they hold it? Nope. The chop continues. Tom Gunn says, let's get the likes up, the watchers. Let's go. I agree. I concur. Here, my good man. Smasheth the liketh. Promoteth the stream. Speaking of promoting streams, you guys may notice in the banner at the top of the screen, the Piratetraders Brigade community would love to have you join. If you're interested, head to piratetraders.io/join. Costs $10 a month. You can quit anytime if you don't like it. And I'm pretty sure that within an entire month of talking about the market every single day, I will say at least one single thing that will make you $10 a profit or prevent you from losing $10 by giving you my insights on what the market is doing. If you are interested, we live stream every morning. We'd love to have you join. Piratetraders.io. Thank you, Demo Trader. Appreciate you. Ships, appreciate you. Thank you, Jay. Well, since there's nothing happening with the ES here, let's just zoom in and talk about the NQ. We'll turn this into an educational opportunity. Why not? Right? So this is what I'm talking about with the mechanism of momentum. You got overnight traders. They're playing tug of war in here. That breaks to the downside and they push the market lower. So when the market opened this morning, a majority of those overnight traders would have been net short. There would have been more people short than long in the market. So at first, the market starts to move lower. And they're feeling good. Those overnight traders are feeling really good. So they're not worried. They're staying in their trades. Everything is good. But then what happens? It turns around and comes back up through the opening price. And then all these sellers start to panic. The sellers from here and here and here and here and here, right? The further up that it goes, the more and more they're like, oh shit, I got to cover. I got to get out of my trade. I got to take profits. Oh no. Oh no. And so very quickly, the market works its way right back up because you're squeezing all these sellers, turning them into buyers. Okay, great. So now you got the regular trading hours crowd. They were buying in here. They were buying in here. They were buying in here. And now they are buying like crazy up here. Well, they've now put themselves in exactly the same position. If the market keeps going higher, great. They'll feel good. They'll keep buying. There's no reason to take profits. But the further down that the market starts to pull, the more of these buyers that start to panic, and then you head straight back down again. So that is why I say they've got to hold this support. Because if the further down they go, the faster the momentum to the downside will become. If they can get above the overnight high, well, then they'll likely bring in another wave of buyers and things will get even more bullish. But when you see all this liquidity, all these orders right at the exact same level, you know half those participants are fixing to get squeezed one way or to other. DNK says news at 10. We'll look for the Bookmap to go dark and find out what happens there. Man, so the buyer's trying to hold support at the halfback here on the ES, and they still can't get anything for it. Feels very mechanical to me. Jay, you'll get nothing and you'll like it. They're getting nothing. I don't think they like it, though. Okay, Bookmap's starting to go dark here. Preparing for the news. Next round of news bots. The last ones did nothing. Can these ones do something? Took out some buyers. One poor schmuck just got taken out for 155 contracts. Sucks to be you, bro. Let's go look at the NQ. They're probably dancing right on that support. They got to hold it. Bernie says, is the white line the VWAP? Yeah, on the Bookmap, that is VWAP. Tony says, order book looking dark? Yes, sir. But as that liquidity begins to come back, we can start to trust whatever move happens. Too early to say right now. Right now, it's just computers picking each other's pockets. Well, those NQ buyers, boy, they must be getting nervous. They've been buying and buying and buying, and now the price is going down, not up. Oh, no. Here comes the liquidation. Okay. Well, I got to call it quits on this stream and head over to hang out with the cool kids that are in the brigade. All right. I got to go hang out with those folk. But here is my analysis for today. ES, nothing has changed. I still think the higher probability is that the market wants to go lower because of the look above and fail in the overnight range. When you look above a balance area high, and you pull back in, the highest probability is that you are heading down towards the balance area low, which is around 52.71. Now, what would convince me I'm wrong on that thesis? If the ES could get above Thursday's high and bring in new buyers up there. If it got above, I would say that that theory is completely disproven. Oh, here comes our liquidation. And it's, you know why? It's because of NQ. All those traders. So yeah, I think as long as we are inside yesterday's range, which we're testing the lows of right now, it's going to keep going sideways. It's going to keep going down to get as many people short as it can. And then out of nowhere, it's going to reverse right back up to get as many people long as it can. And it's going to keep going like that. But if the ES gets below 53.03, you are likely to get continuation lower. Okay. And the only thing that would change my mind is getting above the high. Now, as far as the NQ is concerned, the market is still pinned. We are sitting at that pin as we speak. Okay. So that just basically means every attempt that they make to go away from the pin, they're going to get pulled back again. Every attempt away from the pin, pulled back again. The fact that they created so much momentum this morning, the fact that they had such an opportunity to take the market higher, they squeezed all the sellers from the overnight, and they got a ton of FOMO buyers from the regular trading hours, and they couldn't even get above that overnight high. That tells you the market remains pinned. Okay? So both markets are choppy. For the NQ, I could get bullish if they could get back above the current high. So if they get back above there, they'll start to continue higher. If they pass back through the opening price, which is around 18,500, I would start to get bearish for a pullback. But I'd see it as a chop zone inside the overnight range here. And caution is warranted. The chop ain't over, folks. They still are getting people long and short and squeezing them. And they will keep doing it as long as it keeps working. And that could be for hours. So with that, I will say goodbye. Head on over to the private stream with the brigade members. And we will see you all here next Monday morning. Thank you kindly, Bookmap community. We'll see you next time.